Hello and welcome to the market update for Tuesday, June the 29th. We have the indexes are up today, but up just slightly. We have broken out to new all-time highs, at least in the S&P and the NASDAQ. That was expected, as we talked about last week, based on how the charts were setting up. We'll take a look at those charts here in just a second. One thing to start to keep an eye on, well, as far as the indicators here, the direction alerts, we're still dealing with kind of a tired market condition. Like I said, we've got sentiment, which is above momentum, which is above breadth. Breadth has been lagging. We'll see that here in just a second on the individual charts. But one thing I talked about is as the market breaks out, I said, well, going back a few weeks, when we had the sell-off that we had a few weeks ago, or a week or so ago, I mentioned that that I really didn't expect it to turn into something big because we weren't selling off from an overbought condition, and a lot of times when that happens, you get more of a shallow pullback that sparks the buy the dip type buyers that jump back in, push things back up. But I said, as we rebound and break out again, to watch for the markets to start to get overbought. Now they can stay overbought for a little while, and they can get really extreme in the overbought state. So it could last for a little while, but we want to start to look for that, and as all these indicators start to get in that extreme condition, because that's what will signal the potential for a much bigger sell-off. The trading crowd will start to get overly bullish, thinking that the market will never go down, it's going to go up forever. They'll have full confidence to jump in. You get a lot of retail traders that don't know anything about the markets, but they're hearing everybody making money. They just start throwing money in, not knowing what they're doing, but they don't care because their friends tell them it's guaranteed to go higher. It's not going to drop, and you really get this kind of extreme condition. And that's usually when you get the much bigger sell-off, and that's why these market crashes tend to hurt a lot of people, because a lot of people are drawn in at the top and kind of suffer on the way down. Now, we're not going to let that happen, because we know how to recognize some of those conditions and then act accordingly. When you start to see the extreme conditions, you start reducing some of your risk exposure, or at least being really focused on looking for some sort of bearish reversal signal that you can use to get out, to where you avoid, you're not going to be able to pick the exact top. Obviously you might miss a little bit of the last rally, because sometimes you'll get some of these reversal signals, but the market will still kind of inch forward a little bit. Or maybe you don't get out on that first move down, but you're able to avoid the total damage of dropping, because you're able to get to the sidelines. So when the market gets in this extreme condition, there's usually a lot of signals that start to show up that can warn you what's about to come. I mean, I go back to the crash that happened just as the pandemic was getting started last year. There were a lot of big warning signals ahead of that, and we were pointing them out in the market updates that that it was showing that something big was about to happen. And sure enough, we saw one of the fastest declines in stock market history. So we'll keep an eye on that. I'm not expecting that big of a correction, but we should start to get some signals that if the market is starting to top out. Momentum has moved into the extreme range, but it's not. This will probably end up getting to the far right side of the extreme range, where we at that point, we'd start to have to be a little bit concerned about correction taking place. Breadth, though, is really lagging. It's still in the trending area right here. It's not even in the high. And then sentiment is already in the extreme. So we'll need to start seeing that breadth change. And that will happen as the market starts to get a little bit more confidence, and that's really a good sign that the crowd is getting too bullish, is when you start to see that breadth really move to that extreme range. As far as the buy sell ratios, they're not showing any sort of extreme move. In fact, they're starting to come a little bit closer together here. Buys moving down, sells moving up. This is a lot from earlier when the market had pulled back a little bit. But you'd want to see the buys up in here and the sells down in this area right here that would show that extreme. So from this standpoint, it's showing that we could still run further. We're not in that extreme range as far as the buy sell ratios. I'll show you another thing you could look at too to keep an eye on when you start to get into that condition. Sentiment, we're getting close to the extreme range right there. We'll keep an eye on that. But again, everything's showing that we still have room to run to the upside. But you can also take a look at the index tab up here. And what will happen, and this relates to those buy-sell ratios as well, what will happen is you'll start to see double-digit buys versus sells, the ratio at least. So, for instance, S&P 500, it's right here. Currently, you have actually a few more sells than buys. But what will happen when you get into an extreme condition is you'll have it'll be like 12 to 1, 12 buys for every one sell, or even like 15 or 20 to 1 in some cases. It'll start to get really, usually you're looking for double digit ratios though. The largest ratio right now is the NASDAQ 100, which is almost a 3 to 1 buys versus sells. So the indexes aren't showing any extreme yet. And usually I'll mostly just focus on the main ones: S&P 500, NASDAQ 100, Russell 2000, Dow Industrials, although the Dow Industrials is just 30 stocks, so it's a pretty small group there. But that's another thing to keep an eye on, is when you start to see those double-digit ratios there. And sometimes you might see it in one index. You have the tech stocks really take off, which they have been over the last a couple of weeks or so. That's why you're starting to see the positive ratio here. You've got three buys for every one sell, almost a 3 to 1 ratio there, and that's kind of a signal that usually it's tech that has been leading the market higher. So I would expect that would continue to grow if we're going to continue to rally from here. Now, another thing to point out though too is that sometimes you need a catalyst for the buying. And we are in the summertime, which tends to be, usually you don't get a lot happening in the summertime. There's an old saying in Wall Street that says sell in May and go away. Basically go away, get out of the markets until the fall. The biggest gains are usually from October through May in the markets. But those are general things, general statements and things like that. There have been volatile months, and there have been very bullish months in the summer. There have been very bearish months in the summer. But it is possible that we just kind of go back and forth here. I'm not suggesting that we're going to just see the market take off and get extreme immediately. That's just something we're going to start to keep an eye on. It could be that we slosh back and forth and move sideways for a while, and then maybe in the fall it starts to take off again. But I'm just pointing out that we want to start keeping an eye on some of the stuff. And I'll point it out. If I start to see the ratios pick up here on the indexes, I'll definitely mention those in a market update. We can take a look at those. All right, let's take a look at the individual charts here. Let's switch this back to candlesticks here. So you can see here's where we broke out. This is the SPY, SP 500. And we've had a pretty good move right here. We saw this happen last time, though, when we broke out. We had these lows. We moved up pretty quickly, and then we moved sideways. This is what I was talking about just now, the possibility that we kind of have this type of a move for a couple months to get through the summer, and then maybe it starts to take off in those extremes later on. Now, what that would mean is that you could get these little pullbacks. You know, this is the one that happened just a little over a week ago or so. It's not very big. And because right now we're in the extreme range, but those little pullbacks can just push you back into the buy range. You kind of go back and forth within this area here. What we really want to be concerned about, though, is if we start to get to the far right side, that would indicate that things are getting extreme. But it's just not that alone. That's what I'm pointing out is you'd want to see the far right. You'd want to see the indexes have those double-digit buy-sell ratios. The direction alerts showing extremes. You know, that's what the software's for. So you want to see all these things start lining up. And we're definitely not there yet. All right, let's take a look at the. Hold on here. Let me go back to the Dow. Okay, here's the Dow right here. The Dow hasn't broken out yet to a new all-time high. It was lagging quite a bit and pulled back a lot deeper. It had been pulling back for several days before the rest of the market sold off, a couple weeks ago. And but again, now that the S&P 500 and the NASDAQ have broken out, I would expect the other indexes to follow. So we should start to see the Dow stocks to start outperforming a little bit at some point to end up breaking out higher. So this is looking like a wave A, wave B, wave C of a correction, ABC correction, which means we should start to trend higher from here. And then NASDAQ 100, obviously it's been moving up. Excuse me. Obviously, it's been moving up for quite a while. It didn't have much of a correction at all. It was the first one to break out to a new all-time high. Again, the next thing we'd start looking for is, getting into the extreme range, which we're in the early part of that extreme range. And then you definitely want to see the small caps start showing up as well. They tend to be a driver of the markets moving higher. This is probably the next index that'll break out. We came very close to breaking out to new all-time high last week. Right up to an intraday high was basically equal, and then we pulled back from it. But I would expect, within the next, I would expect by the end of this week, the Russell should break out to new all-time high. And you can see it's not real close to, it's not even in the buy range here. It's not close to being extreme yet. Let's check on the Dow real quick on that. I didn't look at that on. Yeah, it's in the hold range right there from its deeper pullback that it had. Bonds, last week, when we had this extreme high right here, and this is the previous high or low, we said these are the two key points to keep an eye on. If bonds were to move above here, it would mean that the uptrend is continuing. We had this whole sell-off right here on Friday. Didn't get to a lower low, and it looks like it's starting to move back up a little bit right now. So that's going to be I still think these are the two key spots right here. keep an eye on. So wait to see if it ends up breaking down below this low. That means this is a bearish ABC pattern, and that downtrend is going to continue. If it breaks back above here, we could be looking at the bonds reversing trends, going into an uptrend there. So I think those are the two key spots to watch for bonds. Gold. At the big sell-off in gold, I talked about how this looked like it's just a correction for another move down, and that looks like that's what we're getting here. Is it's starting to move lower again. And until that changes, until we start to see any sort of a signal of a trend reversal, that's what we're going to be expecting that to be is in that downtrend. Oil's been in an uptrend. It's starting to consolidate a little bit, move a little bit sideways through here. It could still pull back a little bit. Sometimes when you get these sideways moves, you'll have a little bit of a sharp drop before it starts moving higher. Here it was moving sideways. You get this little sharp drop. Because remember, the sideways move is illustrating indecision. And so it means the buyers aren't sure it's going to go higher. The sellers aren't sure it's going to drop. And you can sometimes get stuck in that range, and you need kind of a break of that range to spark something. Now, usually when you're in that range, if it's been moving up and you start to move sideways, you hear me say this all the time, whenever you see a stock moving sideways, you want to pay attention to the direction it was moving in before it moves sideways. That's where it's more likely to go after it's done moving sideways. And that's true, but sometimes in order to spark that buying, you'll need to drop out of that, dip down below that sideways range a little bit, and then that kind of it kind of brings prices down to the point where the buyers now get excited. They're not quite excited yet. That's why it's moving sideways here, and then it dips down, and that's kind of the area that they want to buy in, and that kind of sparks the buyers. And those are the first buyers, and usually those are the smart buyers that jump in first, and then you get the people chasing the trend as it starts breaking out, and that's what sparks the buying later on. Is the people that are the FOMO, the fear of missing out buyers, and that's kind of what happened back here. Oil started to move sideways right here. It dipped a little bit. That attracted the buyers. It pushed it higher. So we can see something like that out of this little sideways move. And this sideways move can last a little bit longer as well. It has been moving sideways for very long. And it doesn't have to dip down, or it could just break out and go higher as well. The bottom line, though, is that the trend is up, and we're going to assume that oil is going to continue to move up until we start to see any sort of strong reversal price action taking place. The dollar is continuing to trend higher. This looks like a little bit of a correction for a move higher. And I've mentioned this all the time, that obviously I have new people that join each week, but a lot of times the dollar and commodities tend to move in the opposite direction. And you saw that now that wouldn't be the case as far as oil is concerned. Oil is a commodity, and it's moving up as well as the dollar. But you saw a sharp drop in gold that kind of coincided with that sharp rise in the dollar. And you're seeing the opposite happen in gold, where you consolidated right here, and then you had to move lower. And we're kind of seeing that opposite in the dollar. And so for those that, so one thing that I look at a lot of times if I'm going to trade gold is you want to make sure that the dollar is in a downtrend. It doesn't always move in the inverse direction, but it's a factor that is a key factor in the movement of commodities a lot of times. And so you'd like to see, if I'm going to be bullish on commodities, I'd like to see the dollar in a downtrend, or at least acting like a downtrend, just to give me that extra probability that my gold trade is likely to move up. But right now it looks like the dollar is still trending higher. Now it could be that this is wave A, this little bounce is wave B, because that's a little bit of a bearish candle right there. Even though it's up today, it's trading lower than where it opened. So it could be that this is wave A. Wave B right here, we get a move down for wave C, and then maybe that trend continues. We'll have to kind of see how things play out the next few days and see if we pull back a little bit off of that bearish looking candle today. The VIX continues to move lower, although it's trading a little bit higher than the open today. That's something we'll keep an eye on to see if and you know, with the indexes, some of them at those extreme levels, maybe we get a little bit of a pullback or so to consolidate that. Or what's been happening a lot lately is we get a rotation where, you know, we saw this yesterday with the Dow was down. I think it was the Dow that was down. Let me go back to the chart there. Yeah, the Dow was down, but the Dow and the Russell 2000 were down, but the Nasdaq and the S&P 500 were up. So you get kind of that mixed market condition where money is just moving around within the sectors. Usually when you're in a strong sell-off or a strong rally, you have all the indexes moving in the same direction. And they're not always going to move in the same direction by the same percentages, but usually they're all moving the same direction. And so it could be that you see, you know, since the Dow has been a little bit weaker the last couple of days, maybe you see it start to rally, and you see something like the Nasdaq, which has been, you know, going almost straight up. It maybe pulls back a little bit over a couple of days, and it kind of consolidates that way. So that might be a little bit of why the VIX is trading a little bit higher today from the open. All right, let's take a look at a couple of stocks here. By the way, the trading I'm going to do today, I mentioned that I was going to get into some continuation candlestick patterns, but I'm going to take a little bit of a break in between because we've done a lot of these candlestick classes in a row. And the concern I had was that if I've got some people that are joining in that don't really care about candlesticks, and I'm going on 2 weeks or so of talk about them, I might lose their attention a little bit. So this week I'm going to just take a little bit of a break of candlesticks and focus on some other features of the software that we can use. And then next week I'll jump into those continuation formations. But what we're going to talk about today is utilizing ETFs, or exchange traded funds. And instead of trading individual stocks, looking to trade groups or sectors, and how we can do that and how we can use the software to do that. But that's what I'll get into that a little bit later here. But as far as finding a couple of individual stocks here, under computer and technology, under the hold section, remember in this, we're looking for just a specific, ideally we'd like to see a 98 strength rank or somewhere close to a 98 strength rank. Sometimes I don't mind going to a 99. That's even better. I don't mind dipping down a little bit below 98 as long as the chart pattern looks good, but 98 strength rank, going from hold to buy. So we're looking under the hold section of the sectors here. So here's computer and technology. I'm going to go under the hold section right here. And the idea here is that if we find a nice stock that has a high strength rank and a nice chart pattern, then we just wait for it to go back to a buy signal as the trigger to get it. It's just a real simple approach to use the software and trade. There are different entry techniques you can use and different ways you can manage your trades, but that's just a real basic, simple way to go about it. Is just use the signals. I do like the top one in the list here. It has a 99 strength rank, MVIS, Microvision. Let's switch this over to signals here. Now, what I would say is I like it as of right now, especially if it moves up to a buy signal from here. I liked what it did yesterday. If it continues to move higher, it'll mean this is a higher low. And you can see kind of this, got a little bit of this bowl-shaped move that's developing here. Now, we did have this extreme breakout, but this was, now this stock has been linked to the Reddit crowd. Some of you have heard about that. If you watch CNBC, this is a group of traders on Reddit that are made up of a lot of retail traders, individual people, and they kind of focus on a certain stock. You know, GameStop was one of them that they really focused on, and they all just kind of jumped in. And their purpose really is to try to squeeze the short sellers. Usually these stocks are heavily shorted. That's kind of what happened here is they drove the price up real quickly, then it came back down. So I almost kind of just disregard this right now as that was just a unique move that took place because it came right back down again. But overall, if you kind of take out that move right there, you have this nice little bowl-shaped pattern developing, and you were getting lower highs through here, and now I know that was definitely a higher high right there, but you're starting to see the highs get higher through here, and so I'm looking at this as a pullback that could lead to another move up, and had a nice up day yesterday. Let's take a look at the volume on that. I usually keep the volume bars off just because it tends to bleed into the chart sometimes. But yeah, there's been some high volume coming in recently. Now, again, we're waiting for this to go back to a buy signal anyway, so we can wait. If it does reverse and come right back down, then no harm done. I'm not in the trade. I'm waiting for that confirmation. But I think if this can move back up and get to that buy signal, it'll give us a clear higher low right here and have a much better chance of continuing to move higher. And it's important to remember with all these stocks that we go over, none of these are going to go straight up. That's not how stocks move. They tend to stair step. So you could go to a buy signal and then it could drop back to a hold, and then, but you have to understand that that's kind of how they're going to move. They're not going to go straight up. Another one I like under computer and technology is this COPN 97 strength rank. But again, it's kind of forming that. It's had this big pullback. This looks like a large ABC pullback right here. This big move up. So it's kind of consolidated through here. And the same thing, you had a nice move up yesterday. It had this nice move up right here that broke out to a new high right here from this. This was a lower high on this way down. So slightly higher high right there. And this could be a higher low. And again, if this goes straight up to a buy signal, it would clearly be a higher low right there. And this could have that potential to at least get back up to this previous high, if not break out and go higher. So I kind of like that pattern that's developing on COPN. Under industrial products, this is one I pointed out before, Alcoa. It's a 90 strength rank, so it's a little bit lower strength rank. But this looks like it had this big long trend up. This looks like wave A, wave B, wave C is part of a correction right there. And it's been moving up from there. I think if this thing goes back to a buy signal, which should be pretty soon here. Yeah, we're starting to get to the right side of that hold range. And then lastly, if you go down to consumer discretionary, under the hold section right here, like this Barnes & Noble Education, BNED is the ticker symbol, 96 strength rank. Kind of the same thing. You have it looks like this is wave A, wave B, wave C, correcting this move up. You also, if you look at the larger trend, it had this larger correction right through here and then broke out to a new high right there. Again, it's been falling the last few days, so you definitely want to wait for that confirmation. It's starting to move up. It should start to move up here pretty soon. You got a little bit of support in this area from here and here. This is previous resistance. It could act as support, and then wait for that thing to go back. If it goes back to that buy signal, it could be breaking out again and continue to move higher. Keep an eye on that one. All right. let's get into the training for today. Now, we're going through individual stocks here. We're going into the sectors, and then we're looking at the individual stocks. We get a lot of people, and we've had people mention this recently, that they're not real confident in their ability to be able to find the individual stocks. They'll be watching CNBC. Or whatever they're viewing to find their trades, and they'll hear people talking about sectors that are on the move. You'll hear people talk about the FANG stocks, and well, which of the FANG stocks should I buy? Should I buy Facebook, Amazon, or I can't afford to buy all of them, especially if you're trying to buy Amazon. Then how do I decide which stocks to trade? We talk about these groups all the time. You talk about the electric vehicles. How do I know which electric vehicle stock? I know there's Tesla, but there's others out there, and how do I know which one to jump into? And you tend to feel a little bit more comfortable trading the whole group. The whole group is moving. I don't want to miss the move because I might pick the one stock that doesn't participate in the movement of the rest of the group. And so nowadays, what's great about trading in today's world is that there's a lot of these exchange traded funds, or ETFs. And what an ETF is it's just a fund that's put together that trades a certain group of stocks. Or they can be centered around an index. The SPY that we look at, we're looking at our index charts. That's an ETF. That's basically a way to trade the whole S&P 500 index. You just buy the SPY, or short the SPY if you think the market's going to drop. And nowadays there's almost more ETFs than there are individual stocks out there. There's ETFs that are centered around, cannabis industry, and some of them have some pretty unique names that you kind of tell what their focus is on by their ticker symbol, and some of them are kind of humorous. But it's a way to kind of trade the groups. For instance, let's say that I want to. I can see that retail is up here near the top of the list, and I don't know what retail stocks to trade. Do I trade the Gap, or do I trade Amazon, Target, Walmart? Well, if you go over here to the Muscle ETFs tab, it's where you can find a lot of those ETFs. And I can go through, and usually you'll get the description down in here of what they are. But if I scroll down a little bit, let's see, where did I see that? I don't think it was down that far. There it is right here. So here's the XRT, which is the retail ETF. So I can trade the whole. Click on that. I can trade the whole retail. Well, it's not taking every retail stock. There's a group of the leading retail stocks that are part of this ETF. And a lot of times, if you want to know what stocks are in these ETFs, you can kind of Google them. If you Google the XRT ETF, it'll tell you the components of what make that up. But you can trade this whole group. And now I will tell you that a lot of times what happens in an ETF is that you reduce your risk exposure a little bit, because you're not, like I said, you're not in the one stock that doesn't participate. You could buy the solar or the electric vehicle stocks, or you could buy Tesla, for instance, and then Tesla just has a bad news that comes out and it tanks, but the other stocks are fine. Well, you get burned because your one stock that you're in had a bad news event that took place. Well, to reduce that risk exposure, especially of headline news that can come out, that's one way you can reduce that exposure is to trade these ETFs. That way, if Target comes out with some bad news, might drop a little bit because Target's a big component of the XRT, but it's not going to be as big as having the individual stock. Now, on the other side, though, you tend to not also have the big gains. If Target has great news that comes out, it has a huge move up. The XRT will move up as well, but probably not as big a percentage as that individual stock does. So there's always the pros and cons of everything you do, and the pros of an ETF is that you reduce your risk exposure. The cons are that you also reduce your gain exposure. It kind of levels that out a little bit. That's where it's not as big as you would with the individual stock. So how can we utilize this? Well, if you go to the muscle ETFs, and it'll list the top ones. Now, some of these are also leveraged ETFs, meaning that, for instance, a 3 times ETF. Let's use the semiconductor right here. So here's a semiconductor bull 3-time ETF. That means that if whatever semiconductor stocks they're using for this ETF, if they go up $1, the ETF goes up $3. Now, that sounds like, man, that's great. That's the greatest thing in the world. Why would I not want to trade that? Well, if the semiconductors go down $1, this can drop down $3. So it's the double-edged sword. But there's also, and I don't have time to really explain the math behind it, but they are kind of risk. They're pretty risky. It's not as simple as every dollar it moves up $3, because it resets every day, and so it can be a little bit of a risk, especially if you're trying to trade options with some of these levered ETFs. So just be careful with those. I would probably maybe do a little bit of a Google search on leveraged ETFs. I had a link that I used to use that had a nice article about the warnings of leveraged ETFs, but this is probably about 6 or 7 years ago that I used to send people to, but I haven't. It's been a while since I've even looked at that link. I didn't know if the article's still there, but it was a good article explaining leveraged ETFs. But I bet if you were to just Google leveraged ETFs out there, there's probably some articles that could kind of at least fill you in on some of the warnings of those. And by the way, the algorithm is set up. A lot of these do tend to move towards the upper part of the list on the muscle ETFs. But you can go through and you can see here's a solar ETF. So if you want to trade the solar stocks, you can go to TAN. This is actually kind of forming a nice little. These got beat up quite a bit through here, but it looks like they're starting to move back up again. It looks like we're about to break to a higher high right here, very close to that. Pull back a little bit today, but it has also been moving up sharply, and it's in the near term, and it's getting to the far right side of that extreme range right there. So you might want to kind of wait for a little bit of a pullback on this first, but That depends. That depends if you're trying to time it a little bit better. If you're just thinking, oh, you know what, I just want to be in this because I think over time this thing is going to explode and go higher. It has a buy signal right now, so you could just jump in and wait. You don't have to time it better, but that's that's a way you can trade that whole group. Now, one thing I do want to mention here is a little bit of a warning to pay attention to on these ETFs. Like I said, there's a lot of them out there, and not all of them are very liquid, meaning there's not a lot of people trading in them. Now, this one is liquid. This has, if you look right here under the volume, this has about almost 3 million shares trading. So that's a pretty, by the way, you're not going to see the fundamentals in these because they're groups of stocks, so it's not one stock. So these will show zeros, and that's fine. But the volume there is important because if you're going to go buy this, I don't want to be the only one buying it. Because when I want to sell it, guess who? I got to find someone to sell it to. And if there's not a lot of people out there trading it, good luck getting a good price getting out. So my kind of rule of thumb now with stock trades, if you're going to trade any options on these, you'd want to have at least 500,000 shares. So this would say, this is shown in millions here, so at least 0.50. I'd even like 1 million shares a lot of times for option trades, just to have a little bit more liquidity there. But for stock trades, I'd say at least 100,000 shares. I'd still probably prefer to be, closer to that 500, at least 500,000 or 300,000. So let's say 0.3. Let's try to stick around 0.3. If it's below 100,000, it means that it's very thinly traded. And now there is a way to see if some of these are thinly traded, or the one way you can kind of tell if some of these are thinly traded is if they gap a lot. Let me see if I can find one. Well, we can kind of scroll down through some of these. You can scroll down through if you go to your muscle scans and then select muscle ETFs down here. Actually, this is a good one right here. This is a pretty thinly, volume-wise. This might be, now sometimes it can gap a lot based on if it's using overseas markets as well. So this is a shipping ETF, I think. Yeah, bulk shipping. So it may have companies that trade on other exchanges that are part of it. And so that'll cause these gaps a little bit. The volume on this is about 400,000 shares. So that's not too bad as far as liquidity. Let me just kind of scroll down through here. So this one's pretty small. This has less than 100,000. This is like 30,000 shares. That's 0.03. That's not 0.3. 0.3 would be 300,000. That's 0.03. And then when you look at the chart, you see that it's gapping. It gapped up this day. It gapped up here. It gapped down the next day. Gapped up. It's gapping all the time because there's not enough buyers and sellers, and so the prices are moving sharply. This moved up. Here's a day right here where it opened higher, closed higher than the open, and the next day it's all the way down to here. Well, that could have been that there's nobody. This guy wanted to sell or something, and there's nobody to sell to, and so the prices had to drop until there was a seller that was willing to buy. And that's what can kind of create these big gap moves. So you just don't want to get stuck with something like that. Another way you can tell, well, just any sort of real volatile moves that take place on very, very low volume, when it has very low volume. I want to see if I can find a chart because some of these charts are pretty easy. Once they show up, you can tell that they're liquid. I don't want to take too much time doing this. I should have found one before. I did see a few beforehand. That's why I'm kind of scrolling down the list, but I should have wrote them down so I could have gone to them. Oh, here we go. Charts like this too, where you see you have very little movement for the day. This basically means there wasn't any trade that went through, because it opened and closed at the same quoted price, and there's nothing that happened. It didn't move at all. You see, there's no body to it. There's no intraday high or intraday low. It's nothing traded that day. So if you ever see these like horizontal lines like this, that means it's very thinly traded, and it could go a whole day without any trades going through. Look, I mean, look at this. It doesn't even show a volume on it, which means it's got to be so low that. So let's see which one this is. This is a large cap growth enhanced ETN. Whatever it is, I don't want to trade it. Even if it captures a group of stocks that I might be interested in, because there isn't just one ETF for a group. There could be like 10 different solar energy ETFs, or more than that even. So you want to stick to the ones that have a little bit of volume and are pretty liquid. Now, a couple of ones that I do like as far as the chart patterns. Some of these are, like I said, are kind of interesting ticker symbols. One of the phrases that's pretty popular out there right now is YOLO, or you only live once. Maybe some of the Reddit crowd uses that a lot, but that's not from Reddit crowd. It's one of those millennial terms that people throw out there. But this is the ticker symbol for the cannabis ETF. But this actually has a pretty good chart right here. I like the chart on this. And so if you don't know what cannabis stocks to trade, Tilray is a big popular cannabis stock. But they also are very risky because they're being acquired. There's a lot of consolidation going on in that industry, a lot of competition. And so you could choose to just trade the whole group. But this had this big run up last year and into this year, early this year, it had this big drop. But now it looks like a lot of these stocks that we're looking at on the specific stocks we look at each week, we look for a lot of these are coming out these big drops that are starting to act like they're moving back up again. You got a higher low right here. Hasn't gone to a higher high yet. You see all these lower highs on the way down. So this was trending down, lower highs, lower lows. It hasn't gone to a higher high yet, but it did pull back and give you a higher low. And so it's looking like it's in that very early stage of reversing into an uptrend. Now it really does need to go to a higher high here. It needs to get back above this high, and I'd prefer to get back above this high as well to really confirm that it's moving. It's starting to act like an uptrend. But again, this gets back to the argument I always talk about, which is, how much confirmation are you looking for? Because by the time you get a lot of confirmation, and by the time you're really confident the trend is up, you've missed a lot of the move. On the other hand, down in this lower area right here, it might still be trending lower. It might not be turning the corner and moving up. It might have a big move down day and go to a lower low again. You're not real confident that it's in the uptrend yet. So you're taking a greater risk getting in on your entry, but you have the potential for a much bigger reward. If this thing goes back to its previous highs, you have that potential for that much bigger reward. Some people like to wait until it's really acting like an uptrend, so they have a higher probability that it's going to go to that previous high. But they're willing to give up the reward to get that higher probability. They're willing to wait until they're looking for a higher probability of a lower reward or lower return. And that's something we do as traders all day long. I mean, you have to make those decisions all day long. I tend to like to find these companies that have, or in this case, the ETF here that has a high reward, low risk potential, but not a lot of confidence that the trend is turning up yet. And if I were to trade something like this, because that was the reason I'm thinking that we're turning the corners, and that's the first higher low we've seen in a while. Again, it could wait for a little bit more confirmation to have it go to a higher high as well, but that would be my stop area right there. Or this low down here could be a stop area, where if this thing dipped back down and went back to a lower low again, well, obviously it's not looking like it's turning the corner yet. Get me out of the trade. I want to be in the trade. But if it does hold that and goes to a higher high right here, and it works its way back up to this previous high up here, well, I had this little risk, $1 risk or something for the potential of a $10 reward or something like that. That's a pretty good reward to risk in my book. So that's why I like to look for a lot of these stocks that have kind of come down a little bit and are moving up. Or when we're looking at some of those individual stocks, we do see them that they're in clear uptrends and they're pulling back. Alcoa was in a clear uptrend, but had that kind of ABC pullback. Well, they're already showing that they're in an uptrend. They may be near the end of the uptrend, so the reward may not be as big as something like this, but you have a higher probability of getting a reward because you're going along with the trend there. So I do both. I like to see trends that are already established and follow them. I also like to get into the new trend, potential new trend early. This is a trend reversal type trade, but it's also a trend following because it's starting to act like an uptrend. I'm not trying to pick the bottom right here and say I think this is going to go up from here. That's where people think this is going to go up from here. This is going to go up from here. This is going to go up from here, and it just keeps. It's not acting that way. It's acting like a downtrend, and they're wondering why they're losing more money than they're making. I want to see it just start to act a little bit like it's turning around, and then manage it where I'm taking a small risk for a potential high reward. Let's go back and look at the list again here. I need to wrap things up here, but another one I found, and like I said, you can either just scroll through each of these, or you can just, you can click on it, select muscle scans and muscle ETFs, and just scroll through the list. Or you can kind of look at the list to see what kind of group you might want to be interested in trading. I mentioned the solar. I showed you the. Here's a lithium battery ETF. So it's taking the electric vehicle stocks and that sector and breaking it down more specifically into the batteries that are going into those. So all the lithium battery type companies out there, and if you heard an article or read a story about lithium batteries being in high demand, then and you think, boy, that means that those stocks could go up, then you could. But I don't know which ones to trade or which company. I don't know anything about lithium companies out there. So I could just trade the whole group, and this is a nice little uptrend right now. Although it's probably it's not in extreme range yet, but it's having that nice little stair step up. Just recently broke out to a new high. One that you can keep an eye on here is you might have heard of this. Go down the list. This ARK Innovation ETF. I don't know if you have heard of Kathy Wood. She's an investor, and she sets up a lot of these ETFs under her company. And this one right here has become pretty popular because During the fall and winter, a lot of these stocks were, and these were just different companies that were really taking off. They were really big leaders. And so they're really, the ETF here is not for a sector, but it's for, she took kind of some leadership stocks that were really popular for different reasons, high demand for different reasons, and put together an ETF. So this ETF contains Tesla, Roku, Square, Zoom, Shopify, Twilio, Spotify. She even had Coinbase in there, COIN. And now those stocks did really well. If we take a 1 year chart here, you can see this one did. She got a lot of attention here because last year she did really well. Look at that trend right there. All those stocks really drove that movement there. But almost all those stocks corrected earlier this year. They came way down, and so that ETF pulled back, but it's starting to move back up again. So that could be a strategy as well, as if some of these companies. Now the problem sometimes with these though is that the same leadership stocks that led the way a particular year don't always lead them the next year. In fact, usually the opposite happens. But likely she'll be shifting her holdings then within this ETF, meaning it's not always going to be those same stocks that are going to drive it. She tends to look for stocks she thinks are going to be leading the way for the year or what have you. And so if you believe in an individual investor like Kathy Wood, and you want to kind of piggyback on her expertise, you could trade her ETFs. So, you can kind of trade with what she's doing. So anyway, you can see these are kind of endless. But another one I like, and we'll kind of wrap things up here, is ticker is PRNT. See if I can find it down here. Well, even before we get down there, you can see, like I said, you've got this is a small cap growth ETF, a pure beta crude oil. There's ETFs and ETNs. You don't necessarily need to know the difference between the two. They're basically kind of the same, where they're just a group of stocks that you're able to trade as a group. There's a dynamic semiconductors ETF. There's a short VIX short-term option future or short-term futures ETF. Now, if you're planning on investing in one of these longer term, you might want to do a little bit of research on what's making up those. What are the main stocks within that, or even the like on Cappy Wood's ARK investing ETF, it'll show if you Google ARKK, it'll bring you to her website, and she'll show you what she has in the fund and what percentage is the fund. So she has a lot of Tesla in the fund. So if Tesla has a bad day, you could expect that her ETF is going to drop that day because it's a big percentage of it. But you might want to find out what's in some of these just so that you know what you're investing in. I'm just going to type it in because I can't find it here on the list here, but because I went down the list pretty far to try to look at some different ones here. But PRNT it's the 3D printing ETF. One of the trades I got into recently off of this idea that it was turning the corner was DDD. which is a 3D printing company, 3D Systems. And what I liked about it was just kind of what I've been showing you, lower highs, lower lows through here. And then it broke out to a higher high right there. And then it pulled back right into here with a higher low. And it had a little bit of a bullish candle, reversal candle right here. So I got in. I had to be patient. A few days, it would just kind of move sideways. But I caught this move right here. And I did it with an option trade, so it was really nice percentage gain right there. But it looks like it's turning the corner here. Now today's kind of a bearish day. I wouldn't be going and jumping into this just yet because it might be pulling back again. But again, what if you don't know what you've heard that 3D printing's making a comeback and is getting popular again. I don't know what individual stocks to consider. It's got a whole ETF here. PRNT, and you could look to trade that. That one looks like it is kind of in an extreme range, overbought range on the indicator there. That's because it's moved up. It moved up very sharply right through here. But again, it's giving you that. It's starting to act like an uptrend. And you can see back here the previous high. So there's a lot of upside reward potential. It doesn't mean it's going to go back to its previous high, but if it's starting an uptrend, that has that potential, and that's where that reward to risk comes in. You do want to check liquidity. It's about 140,000 shares. It's on the light side there. Like I said, I'd probably want it to be a little bit closer to 300,000. But it's got enough to where you're not going to be you're not going to have to wait a whole day to find someone to sell to. It's got enough movement there. Unless you're planning on buying 20,000 shares or something, you might have a tough time exiting that position with that light of volume. But I don't think that many of you would be putting that much risk into something like that. All right. So anyway, hopefully that helps a little bit. And like I said, for those of you out there that don't have a lot of time to look at individual stocks, it's a great way to just kind of focus a little bit on those ETFs. And I've been focusing on the index ETF or the sector ETFs and things like that. But like I said, if you just believe the S&P 500 is going to go up, and you just want to own the S&P 500, you could buy the SPY. It's $427.76 per share, and you can just kind of trade the whole group. I do this with options all the time because there's options on all these as well. If I have a situation where I don't see a lot of individual stocks that I want to buy options on, but I'm pretty confident the market's going to move up over the next week or so, I'll buy calls on the SPY or puts on the QQQ or something like that. Take advantage of the whole group, of the whole index moving, and it's a great way to kind of expand your trading and diversify your trading a little bit. All right. Thanks, everyone. Have a great week. We'll see you on Thursday for the stock specific class. Bye now.